right, a good day to all of you devils out there. Sam here with you on a Friday. What are we, June 6th here? We're kind of midday, and as it's a Friday, that means we've got a Bitcoin Friday for you. So I'm going to start off here and give you the bullish perspective. My partner Quan, who you guys have now gotten used to, he may well serve up the bearish view, if not today, sometime over the weekend. So you can look for that. Now, just a quick reminder here. We'd like to encourage you to follow us on Twitter if you're not doing so already. We really do make a real effort to engage with our Twitter followers, and that's everything from where you'll find access to our public Discord if you want to kind of get a sample for what we're all about. Or we often will poll our Twitter followers, let them decide what gets a video analysis, and just some other things that we offer, giveaways and chart challenges. So we'd like to encourage you to give us a follow on Twitter. I think you'll find that that will be a follow that will be worthwhile. All right, guys, so just to kind of quickly recap here, as it's been, I guess, most of the week. It was, I guess, the last video we did was on Monday. So we've had a little action off of this low, not enough to confirm that we have a good solid low in, but something to spark some interest. Now, just to recap here from this pivot here, from the bullish view, we're working this as an ABC, and the potential candidate down here for a C low is legitimate. It's certainly, it's all technical. You can work a count through it to get to a pivot down here. Now we do have, excuse me, we do have the algo target sitting down here that is unrealized, right? So here's our algo target. They might be going for that. That would be technically a perfect spot for them to tap it right along that median line, which seems to have, it's been tapped now multiple times, seems to be a bit of a magnet for the market. But as we know from Andrew's trading principle, number 2, that very often pivots will be made on or very near to the median line. So potential candidate down here, but let's not forget that we have this algo target down here, and the algorithms that sold here and here are still just sitting short, waiting for that target to get hit. So again, as I will like to remind you, just because you have a target there doesn't mean that it's inevitable that price goes there. But there is a group of traders with a vested interest in seeing us get to that level, which is down around 5,200. So let's dig into this with a little more detail. So this is the 4-hour. I'm not in log scale. This is the 4-hour. Let's go to, I think I've got the 15-minute here. Give me 1 second. Okay, I'm back. All right, so looking here now, so here's that pivot low here, which is effectively what we've got is a double bottom here, but we do have a count that fits in here. So if that's a 4 coming down, we can get a 1, 2, 3, 4, 5. Then we get a 1, we get this little spark here, deep 2, no question, deep 2. And then we go into what would appear to be a fairly technical impulsive structure. So that's good news for bulls. Now, I'm going to take some of this off here. So let me get rid of that. So look, it would appear that we go 1, 2. Here's the big impulse. That's our 3. Nice drift down for a 4. You can see this prior level. I pointed this out previously. So this pivot here tested resistance, 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 resistance. Finally, the break. It comes back. It's retested, i.e., prior resistance becomes support, and then we get the liftoff. So if we just approach this, I will remind you that the benefit here is doing the exact same thing the same way. So here we've got a 1, 2. We've got a candidate for a 3, candidate for the 4. So if we think about where we might be going for that 5, so if I just do basic rudimentary, same thing you've seen me do 100 times. I'm just grab it from my 2 to my 3 high. All right, so 2 to the 3, we come right to, we get this confluence here. So we have our 38, that's right where we're looking for the 4. in conjunction with this level of resistance support here. First it's resistance, then it's support. And then you've got the Vegas wave right there for a kicker. So that, and then you can see here, you get a little A, B, C. So just a perfect, just absolutely a perfect. You look at this, even this trend line here is just so perfect that we get this little channel here, even if you draw it this way. You get this little channel here and it's popped, and then always, well, not always, but very commonly, it'll get a retest, and that's what creates the 2. We can't get a new low here, so we get a higher low, and then look what follows. Now, we go, is that front run on target? Probably. So an algo that bought here, this is a front run to this target. If not there, they certainly got it here. So we can make a case for a fairly solid move here and a good pivot here. Now, with this move up here, it appears that we get a little kicker in the 5th. So I can get, yet again, now look at the similarity here between this 1-2 and then this 1-2. It's these deep 2s. They're either shallow or deep. One thing that Bitcoin has been difficult with is the second waves, is they've been either low percentage-wise in terms of how shallow they've been, or low percentage in regards to how deep they've been. Very rarely have we seen a good, simple, easy wave 2 that came right in that pocket between the 50 and the 618. It's just the personality of Bitcoin right now is it's constantly, there's volatility around pivots. So this is a push to get to new lows. This is a push to break that low. It fails. The market's too strong. Look at the reaction. Look at the reaction. You see that? They can't get the new low. Boom. I don't know if, could be stops getting run, whatever it is, more buyers than sellers. That's a lack of sellers. So we test down here, and then we get this pattern here of impulse after the test, impulse after the test. Is this another impulse? Well, I did notice a few things here. So if this is our 2, 3, 4, this, we do not overlap here. Now note that. So we get an impulsive structure up here for the 5th of the 5th. We don't overlap. So I would check 2 things here. First thing I check is from the 2 to the 3. Right? We check that. They give me right on that 3. So what do we get here? All right, so that should surprise nobody who's watched my videos. So we literally, it's like they dip a toe into the golden zone just enough to get the fill they're after and run the stops that are just sitting on the other side of the 618. Common error that people don't know to put it under the 65. So it goes to the 65, to the tick, and then look at the reaction, right to target. Right, you gotta know that that's there. You can't not know that that's there. So hopefully that's one of the benefits of watching these videos. So from 2 to 3, incredibly technical. So reasonable to suggest that I've got some sort of a significant pivot here. Now so if we go here and we look at that, well, are we looking for an extension? Not really, because we've got a completed 5-wave structure here. So it would appear that I've got a completed 1 wave off of this low, right? 1, 2, 3, 4, and I've got all this good subdivision into my 5th here. So now what's next? Well, again, being 2 waves, right? Constantly difficult with Bitcoin. So if this is a completed 5-wave structure, it's hard to argue against that. So I would take my fib tool from that absolute low to my technical pivot high up here. And what have we done? Could that be the 2? Well, what did I just start with telling you? They've either been annoyingly shallow or frustratingly deep, but they have not been right where we want to see them, right where we would expect them, down here between the 50 and the 618. Now, we don't know that that's our 2. We don't know that. But we could make a case here that, let me open this up here, that you've got enough corrective activity here to call it would be low probability, but given Bitcoin's personality of either very shallow or very deep 2s, it's possible. So let's just put a count on this. So it could be that you've got A, B, C. It's possible. Let me get that degree down a little bit. That's kind of silly. Okay, so it's possible that we've got an A, B, C, and then we're just going to get a very shallow 2. Right, we saw some of that in 2017 when the market was just raging. It's certainly possible here, if we break out of here, that we have no choice but to label that as a 2. Now here's the alternate. So if we keep this down here, now keep in mind here, remember how I told you that that significant resistance line here that was then support here, that has a way of coming back into the market. That's why I like these to extend all the way to the right, so I don't forget about them. So one thought is here that this one wave high, all right, so that's potentially some support. Resistance becomes support. That's one thought. The other possibility here is that we're just not done yet here. So all we're doing is putting in a B here. This is our A. Now it could be, yeah, looks like that would be our A. So we'd have an A. We're going into the B now, and then there's another kick down to give us our C. So if I look at my length of my A, well, where's my B? Well, we know a B very commonly between the 50 can be as high as the 786. Can be higher, actually, but this is the statistically where we're looking for, is between the 50 and the 618, just like a second wave between the 50 and the 618. Now, this is a push to get to new highs. Excuse me. If it rolls over, that's the failure that creates the C wave. So if we have the possibility that from here we're heading back down here, this would be an interesting zone, as we'd have our 50. We'd have that, well, this thing is sticky. We'd have our 50. We'd have our prior support resistance line here that's come into the market so many times. Now here we have our algo target, but we have our second algo target down here. So there's a few other things we could put together, but we have a contender here for what I would call a hot box, a buy zone down here, where we'd have second fibbed algo target here. Here's our negative 618. Here's the 50. Here's the 618. So if Bitcoin is going to come down again, here's the buy zone. All right, as I see it. So again, we could, of course, put a pitchfork on it if we don't know if these pivots are going to hold. So it's a bit premature to do it, but I can certainly just stick this here. If that's going to hold, if we're going to go up here and hold, that might be too steep. So maybe we're going up to the 618. Now that gets a little bit more interesting. So this could just get dragged over here. We don't know. I wasn't really making a time projection as to when we get there. We just know that this is the probability zone here. So this could very well be down here. So that's a candidate here. If this pivot holds, and we don't know where that pivot is. We don't know that we have a pivot. Right now, I'm just hypothetical. That's a reasonable zone. So golden zone to golden zone wouldn't surprise me at all. If there's a push down over the weekend, that's a likely support area. So that would be, so this here, I'm on GDAX here. That would be between, call it 6,300 and your 618 is at 6,180, somewhere in that range. I would certainly have that highlighted, if nothing else, alerted on whatever platform you're using. I would have that alerted so that you get some sort of notification if that's if that's going to be offered. Now, it looks like here we're getting a little kick in Bitcoin as I'm recording this. So yeah, again, I remind you, I don't have a pivot up here to work with. It's just a contender and just a candidate. You can see here now, so we're sitting at the point of control for today. So for this visible range here, here's where most of the trading volume has taken place. And you can see here, as we're sitting right on top of the 50. So I've got the point of control and the 50 overlapping themselves right here perfectly at this level here with 66.20. Now, again, this could go higher. We could go up to the 786. We don't have a pivot yet, but we have the ingredients here for this to set up as a B. But keep in mind, right? So we're playing the probabilities. Probability is that a second is going to kick in between the 50 and the 618. But recognize we do have this tendency of Bitcoin to offer very shallow second waves. So it's possible that this correction is in, and that we're just going into 1, 2, and this is some sort of an impulse to start us into the third. This would be the first of the third, likely. So I'm not suggesting that you load up here and that we're off to the races. I'm not. I would be much more comfortable buying it down here, right? That's the pattern that has the highest probability. So why chase something here that's already approaching, in this range would be approaching full retail as opposed to waiting for it to get marked down. So something to think about. Now, as technically as it's trading here, this should be encouraging for bulls, right? The very, very clean, very technical, pure Elliott here. We've got good impulse waves moving off of this low. So again, not ready to declare the low is in, but we have all of the ingredients that we would anticipate finding at a low, right? So it's this is what they look like. There is, as we double bottom down here, strength, the implied strength in our inability to make the median line, and then a fully realized impulsive wave structure with very technical subdivision in it. All the fib ratios are spot on. You can see the algos are all over it. This is what it looks like. So again, the ingredients are there for a good low. Now, you never know, but again, this is what they look like. So I thought I would do a couple other things here. So there's all your Elliott and your fib relationships, which we tend to go over in great detail in every one of these videos. As I remind you, the real power of this methodology that I'm trying to teach you is that whether I'm looking at foreign exchange spread, whether I'm looking at equities, indexes, crude, gold, name your commodity, name your asset, it doesn't matter. It does not matter. They all trade exactly the same way. And if you are consistently, if you're fighting that, resisting that, challenging that, there's not much I can do other than to just continue to come here and give you this evidence. That's really all this is. This is just evidence to support this methodology. Now, again, just because you try and do this doesn't mean you're necessarily guaranteed to make money, right? So there's a lot of, this is 20 plus years of screen time watching this and knowing characteristics and tendencies and, the things that come, like any skill that you develop over time. There is huge benefit in the amount of times that I've done this analysis, right? It's just a lot of time of doing this. So I don't want you to get the impression that it's easy. Now, it may look easy when I'm doing it here because I've done it for so long. It's not easy. But the analysis, learning how to master this is very achievable. Now, what you do with it, how you manage the risk, how you manage entry and exit of the market, that's a skill set that is somewhat unique to the individual based on your account size, your risk tolerance, your personality, how your risk profile, how aggressive you are, how old you are, how much money you have to play with. There are a lot of variables that will dictate and influence your success with this, but the analysis must stay the same. Yeah, I can't emphasize that enough. That is the value of what you're seeing here. It's the same thing applied the same way every single time. Now, that doesn't mean that this is an absolute, that this wave count is absolutely finished and done and we have it. It means I have all of the ingredients here for an impulsive one wave. For all we know, this ends up being an A wave, and there's no way to know for sure. But so all you get as a trader is probabilities, tendencies, market personalities, fib ratios that have a tendency to repeat. That's it, right? If you're looking for certainty, you're looking in the wrong place. And if you're uncomfortable with that lack of certainty, or if you're uncomfortable with the idea that you are going to be wrong way more than you're right, then you got to really think long and hard about whether this is something you want to invest any more time in. Because I can absolutely guarantee you, at almost 25 years of doing this, I am still wrong way more than I'm right. Way more, not even close. Right? These are dynamic. Waves or counts are changing all the time. All we get is probabilities. But so you can say, well, if you're wrong more than you're right, why am I listening to you? Because what I hope you'll see here is that with reasonable money management, you can do extremely well. I've made my living this way for a very long time. You can do extremely well here if you respect the risk and are disciplined about the money management. And that's almost always what gets people in trouble. Almost always. I moved the stop. I didn't want to get stopped out. I didn't want to pay the taxes. I didn't want to do that. I've heard there is no excuse, rationalization, justification that I haven't even either told myself or heard from 100 clients. It's discipline, right? It's an absolute maniacal discipline to the risk control that will determine your success. You don't like this approach? Yeah. Well, first question, why are you watching? Maybe it's new to you. But I promise you it ultimately comes down to risk reward, disciplined with your entry and exit, a willingness to take a stop multiple times if need be. That's what will determine your success. This is the fun part. Solving the puzzle, at least for At least for me, that's the part that's interesting and challenging, trying to solve the puzzle. But then once you're in the market, it's a different story. Right now we've got money, and nothing, well, very few things more emotional than money. So that's where your primitive brain's going to kick in: fear and greed, and that's what creates these waves, right? Greed, fear, a little bit of greed kicking in, potentially fear to follow. Right? It's fear and greed. Human emotion reflected in a chart of price. Simple as that. All right, one other thing I thought, since I'm running kind of long here, I wanted to show you just a few other things in the interest of just kind of showing you a few things. So here, for those of you that either just don't have a grasp on the Elliott wave yet, or just going, God, I don't, so many rules, and I don't want to trade that way. All right, I had no problem with that. I'd be quick to tell you that Elliott is optional. What is not optional are the fib swings and fib relationships and market geometry. Adding the Elliott wave just gives you a way to organize these swings and give the advantage of the probabilities that come along with that. So I just encourage you to don't get overly hung up on the Elliott wave side of it. Is it helpful? Yeah. Is it essential? No, it's not. Now, so I'll make a case here to show you this, to try and simplify things. All right, so a few things that are just very obvious here. So always a good idea to wick off support and resistance, because they have a way of always coming back into, well, I shouldn't use absolutes. They have a way of very often coming back into play in the market. So you want to wick these things off, right? Just so you have an idea, so you don't forget about something, right? So here, this clearly something was happening up here, and you can do it. You can do it with lines. You can do it with square. Where's my square? You can do it with something like a rectangle. You see something like this where you have all these wicks over here. And you go, okay, well, that was clearly supply came into the market. That was resistance. Now, do I want to run this over here? So I run this over here. Well, look what we're running into. So if I scrunch this down a little bit, right, you see that? Oh, interesting, right? So if I bring it right to that here, so here's the pivot, right? You see this now on the 15-minute? What do we run into? Prior supply. That's where supply came into the market. So resistance. If we can get through this, at some point, if we can get through it, we're going to come back down. That could well be tested for support. That's what creates it, guys. So you want to, so something like this, no, I would not be wicking off necessarily every little pivot in here, but significant pivots. You just want to keep an eye on those and extend to the right. So something like this, you can extend that all the way over, so it stays into play, because odds are reasonable at some point that may very well come back into play. So just a reminder there that's a good habit to get into. All right, so no Elliott wave here. So here I've changed. I'm over here now I'm on Bitfinex. I don't know why. I just happen to have this as a blank chart. So a few things to look at here. All right, so pivots, major pivots. Whenever, just by now, if you've watched enough of my videos, I'd like to think that you now know to look for median lines, okay? This algorithms use them. This is just very, very consistent in the market. You've got to look for these. Okay, so there we have it, right? So from swing low, you got to get, it is annoying, you got to get right on the pivots. You really do, right? It will make a difference. So that looks fairly solid there. Okay, so a couple of things. And I've shown this God knows how many times, a lot of times. Where's my box here? All right, so here's our corner pocket. So from that corner, we have 80% probability. Now, caveat, as long as these three pivots hold, as in this low, or technically this low, as long as this low holds, we have 80% probability. I've repeated this many, many times on many, many videos. That is simply the best odds in trading, period. As I've said before, you don't need to do anything other than learn how to draw pitchforks to be very, very successful in the market. You don't need 20 years of Elliott wave. You could do extremely well just drawing pitchforks. Right now, you got to have some money management as well. So if you're entering here for whatever reason, maybe you took the first little retracement, well, you better have a stop down here. Right? You can't just blindly go, well, I know Sam told me I got 80% odds, so I'm just going with it. Yeah, yes, you do. If that low holds, if that gets taken out, bet is off. Odds are off. right? But 80% probability. So what do we do from this low? All right, boom, low holds. It's tested. Boom, got it. So here, this is the 50%. We get it again. Now here we don't make it. So the failure to make the median line, because we can't get there, that implies weakness. What do we do? Right? So now, that would be someplace that I would keep one median line. So I would have this, so I might have 4 squares. So up here, well, I have it here, so you can see what I mean. I'd have 4 squares here. Now let's go back here so I can show this to you. So I would keep that. So I would have this was a significant median line. So there could be this is the 150. So this parallel here seems to be in play. So if this is going to continue, if this were going to roll down to that C, well, then you got to make a judgment call as to whether or not it's warranted to put the 200% on there. So let me show you this. All right, so here, let's put the 200%. Now, does that make sense? Well, you not by itself, right? So I would want to have something additional on top of that. So from that low to that high, well, now that looks a little more interesting. You see that? So now I've got some confluence here. So I've got a 50% and I've got my 200 of this the set of median lines that has been very much in play in the market. So if I were to come out here, yeah, I would look at that. But in addition to that, I would certainly draw the downsloping pitchfork. Right? So now look what I get. Now I get good, interesting confluence. So now I have the potential down here. That's why I say I will like the buy on Bitcoin a lot better at this 50 than I do here with a front run on the 38, even though that may end up being our pivot here for a wave 2. It's possible, right? That's less than 10% of wave 2s will be that shallow yet. They're at 10%, right? So it happens. So if this is going to come down one more, that's a must buy. Must buy. Let me rephrase that. That's a must buy for me. That's zero hesitation. I buy that. My stop's under the 65. I don't think twice. I don't ponder. I don't wonder. I don't fret. I just boom, I buy that. I'd like to think you'll do the same. Now, maybe you got to do a little calculation of, how much am I buying? Well, if I'm stopped out of the 65, what's the impact to my account? I'm not just saying blindly buy. I'm saying that's a technical pivot that you need to be prepared to buy. How much you buy, what the impact to your account is going to be if you are stopped out. Anticipate being stopped out, because we all know we're going to be wrong more than we're right. So the question is, what's the impact to my account? Okay, so if I can afford that, if I can afford that, what's my potential reward? Well, there's the algo target. We know an algo is going to kick in and buy there. That's without question, right? I don't think I have to prove that anymore. We know an algo is going to kick in there with that target. So what's the risk reward there? So let's just map it out. So to that first target. Now, we don't know that it stops there, but that's a reasonable target. So if I'm going under the 65 on that stop, well, there's 4 to 1. All right, so that's pretty good heat you would have to be taking on the way down. But the other scenario is here, if it does come that low, you've got a second entry here. All right, that's something to consider. So you might, if we're down here, if we keep that under the 65. So if it were to continue to come down, right? So we know algos will buy at the 50, they'll defend at the 618. So let's say we come down here and we're getting there at work, we don't know, right? I don't know. Somewhere down here we get to the 65. But I kind of like the idea of the 65 at the median line. So if we were to get that 65, this is an opportunity to add again, but look at the risk profile, right? So now I've got 14.5 to 1. So you got to look at that and say, well, oh man, so let's say you get filled here and it turns, and you're going, oh well, man, I wish I'd loaded up a little more there. That was really good at the 50, I had the median line, all that stuff. But Sam told me to wait. Look, it's not going to go straight up. Right. I mean, it could, right? With Bitcoin, anything's possible. But if you're filled here only on a partial of what you had allocated to the next Bitcoin long, and you don't get the opportunity to add here and get your 15 to 1, well, there's going to be some sort of retrace. Likely. Nothing's guaranteed, but likely you're going to get some sort of retrace there that you can add here. So you got this one. Now you can tighten your stop to break even. You can add here. So you get a second chance at it. So you can end up with the same amount, right? You didn't have to withstand the drawdown that was freaking you out as it went down to the 618. So this actually may well be a better approach. Right? So half of what you were going to allocate here at the 50, the other half at the 618. So do the math as to what you're going to end up losing if you get stopped out of both of them. But look at that potential reward. So just a way to think about it so that you're maximizing the possibility. And don't get upset because you didn't get your full position filled here. There will be a retrace. There's always a retracement. Always. At some level. Right down here in the 15-minute, I can absolutely promise you there's going to be a retrace of some sort. Because the people that caught that, greed will kick in, a little bit of fear. Oh, they got to sell it. The trailing stops get taken. The little day traders that caught that are going to take their profit. You know, so I'm on a 15 minute, so maybe the 5-minute trader or the 2-minute trader gets that, and that's a big win for him. Stops get taken out, profit is taken. You know, name the reason. There will be a retracement. Trust me on that. All right, so let's pull that off. So that's a potential roadmap here. So I just wanted to give you the heads up here that you can combine median lines all the time. All right, so I thought I would just offer you one other idea here, just in the interest of continually trying to teach some things here. Let me get these all off here and get the clear this up and go back to where we started. All right, well, so you got, remember one other thing just before I leave the pitchforks. You've got pitchforks that you can draw from any of these pivots here. So right here, I can go up to this one, I can go down to this one, and what do we get here, right? So right to the, so again, here it is again, guys. You got to understand this. Okay, so this great looking pivot down here, and I'm actually not spot on that. Here we go. Okay, so we have, here's our wave one. Here's our, remember that line of resistance that we talked about? It was here. So that was actually, so that was on GDAX. Either way, here's our wave one. Here's our pivot, right? Remember this was a technical pivot. So if you've got, again, from that, it doesn't matter that it's a different median line. It's still a median line, 80% probability of getting there. What do? 80% probability of getting to the median line from that pivot, right? So remember, it was right in the golden zone. Okay, so when you get, so that would be the golden corner pocket, right? That's the, if you did nothing, and I mean nothing in the market other than trade golden corner pockets, you can be very, very successful. You don't have to learn any Elliott wave. You just have to recognize pivots and be able to draw fib retracements. It's not that hard. Okay, so look, is there anything else I need to put in front of you? Remember, it's not, the algo tell is not this. It's this that I know that's an algo trade. It's the reaction at the target. Since hitting that target, what have we done? We've gone right back to the 618. That's the reaction. Is that a reload? Could be. Certainly could be a reload here. Look what we've done since that. Or do we need to, well, let's get that off. Or is the pivot just moving higher? Well, here now, if I move to that, right? So now I've had a slight break, but here, dipping the toe. So is this potentially? So think about it now. Well, here I'm so conditioned to do it, I can't help but do it. Right? So does that look like a 1-2? Right? I was trying to keep the Elliott out of it, but that certainly sets up as a 1-2, potentially 3-4-5. Right? So, but I'm gonna try to keep the Elliott out of this. So I just try to demonstrate that to you that you don't need that Elliott wave. You could think of it this way: I've got a little move off of prior support, and what have I got now? I've got a higher low. What do I have here? I have a higher high from that high. So I have the ingredients of the start of a trend: higher lows, higher highs, of an uptrend. Right, now, other thing, so you don't have to use traditional structure. So you could go down like this. You go here and go up here and say, well, anything happening here? Well, we're getting through it a little bit. It's one to consider. The one that's drawn, I think we had another one here. So potentially now, if this is going to come down, so let's try and put that together. So from that pivot here, so what do I get? Again, I'm looking for confluence. So I've got kind of an area of confluence depending on the timeline that it gets here, right? If I'm going to the 618, it certainly could be that I've got something like this happening. If we're gonna go up a little higher, So maybe I get intersection right here. Right, well, that's what I've got, a nice little confluence zone where I've got the downsloping median line. I've got, well, I got to get this right on the pivot. I've got this kind of odd-shaped median line here, but I've got a pivot, and a pivot. So as long as that holds, this is a likely area of support. I love to see that confluence of median lines. Right, so you got to play with these a little bit. I'd pull it up here. I'd check every one of these. I'd put it here and go, oh, if it's going lower, maybe there's something else I need to know about. Right, you kind of got to play. This is solving the puzzle. Where are the puzzle pieces? Where is it? Where is it? Where is it? All right, one other puzzle piece that I have never shown on here before, but I do check them from time to time because they can have value. And that is some of Gann's most basic work, right? So, okay, so before you freak out and think, oh God, now we're getting into the Gann theory, that's not, no, this is very, very simple. Now, Gann was an interesting guy and had a lot of interesting theories about price and time and how they related to the way the market moves. And I'm certainly not going to give you a long video here on the application of Gann. That's a very deep dive, and some of it I think is a little out there. Some of it has value. So let me just show you one little trick that you can do here that has value. You can think of it this way. So I'm going to show it to you two ways. I'm going to show you this trend angle. So this is Gann's theory was that the 45-degree angle was important to the market. So let me get this. So all you do is take that Gann angle and you put a 45-degree angle. So you got to get it right on the low. It does have to be right on that low. So you can see here I've got a 45-degree angle. Now I can extend that, right? Get it. You got to get it right on there. Okay, so there's my 45-degree angle. Well, what can be useful is just go down to the Gann fan, and from that angle, from that exact pivot, you draw this your center line here, your 1-to-1 line, right on top of it. All right, so Gann's theory was that, saying I've got these color-coded here, so that above the 1-by-2 line here, which is doubling the 1-by-1, right? So if I'm so beyond that, that's bullish. So this move here, you catch the break of the green line, right? That's bullish. So if we're on the other side of the 45-degree, bullish. If we're on the downside of it, bearish. Now, the downside would imply that if we come down, if we break this line, if we break that and we're going to keep going, that's a sell signal. So that would be a push. Well, here we'd have these other angles potentially coming in for resistance, at least from Gann's perspective. So if we break that, that's bearish. These could potentially set up for support. Right, so right now we're just kind of hovering on the 45-degree line. So we're kind of, we're a little bullish, a little bearish. We're in between. All right, so the market is unresolved here in terms of where we're going, at least from using this pivot with that 45-degree angle. So that's something to keep in mind. So now, again, in the interest of looking for confluence zones, if I go back to my fib retracement and I work from this absolute low to my absolute high, what do I get here? Now, again, see, I'm constantly looking for confluence. Look at that. Right, so if I think about this and think, okay, if we're going to get to that 50, if we're going to get there, and that's my A, and some sort of B is going in now, and some sort of C, well, where I'm looking for the 2 at the 50. Well, now I've got this my 2-by-1 Gann line intersecting my 50. That would be an important point for Gann. Gann was not about fibs. He used 50, 75, 25, just a different approach to it. So this is a confluence zone for me, would absolutely get my attention. So again, so we could do the same type of thing from the top. So let me do this again here. I know I'm running long here, but it is a weekend here, so let me get my 45 on there. Where are you? 45. There's 45 coming down. Okay, so now I'm going to take my Gann angle, or my Gann fan. I'm going to go from that coming down. All right, so here's the idea being above that we're bullish. If we break, let's see if I can get this. If we break above this, that's bullish. Right? I didn't reverse the lines, but it doesn't matter. This red line here, if we break above it, that's a good indication that we've gotten bullish, and what likely candidate would be the next algo target. Right? If this holds as our B, which is certainly a reasonable scenario here, that we've had some sort of an A wave go in to the 38, we're putting in our B wave here, and we could have A, B, and it looks like there's some subdivision into that B wave to give us a 3-wave B before that heads down. Right, well, here's the 45-degree angle. Again, that's our bullish bearish. Here's the 2x1, the 1x2. So a break, if we pivot here, which wouldn't be unreasonable, and head back down, here's the critical support. Here's the intersection of the 50. Right, so something else you can do, and if you don't like working with the Gann, or you're like, well, that's kind of a pain in the ass to draw that angle, you can go to the Gann box, the fixed Gann box. And I'll show you that just real quick to wrap it up here, just to give you some other things to play with over the weekend. So again, just a reminder here, we've got this algo pull here as we approach the 618 with that target down here. Well, interesting. Look how the target is on top of that pivot. But so if we come down, so let's do the same thing here. So let me show you this. If you just want a quick way to do it, where is it here? We can go to the Gann square fixed. Okay, whatever pivot you go to, it'll draw it for you automatically. So you're looking for an area. So what this is a squaring of price and time. So let me get that. So all I'm doing here is here's the first. So since we go from this, we essentially go straight up. I'm putting the first square right here. So it drew those lines for you automatically. So you can see here, here's that intersection again. So this is an easy way to do it. Now, one thing you have to be careful of is when you change the time or the scaling of the chart, you may have to readjust accordingly. So if you go to a 15-minute to a 60-minute, that's going to screw this up. So, but you can see here, you can't see that angle that I drew because it's right on top of it. You could do the same thing on the way down. So here's our center line. So this is our 45-degree line. This is our 1x2. Here's our 2x1. So you have the potential now here for this confluence zone to be validated. So we've got a straight fib pull, and we've got our Gann square here with our support line here. If it breaks, that's bearish. If it holds, then we're set up for potentially now a move, as I just was trying to show you here. We got to get through this resistance, but that's the target. So our target up here is 7,023. At least as we sit on Bitfinex. So just another thing to consider, right? Just another set of tools that help in terms of looking for confluence between multiple technical indicators. And in this case, we're just looking at market geometry. Nothing more. No Elliott wave. Well, I guess I've got an ABC in there. But you could just work from the algo pulse. From swing high, swing low. We've gone to the 618, tested it twice. Here's the target down here. Here's the support line. So this whole area here is an area of interest, right? No Elliott wave is required. Note here the arc, how this has been resistance to the market. So you'd be right in the pocket there, right in the pocket for a buy. Boom, boom. All right, that'll give you guys a few things to chew on over the weekend. If you're interested in getting some training, knowledge, getting into our public Discord, mastering this, which is doable, then give us a visit over on our website. You can find us at tradedevils.com. You can follow us on Twitter, where you'll find the links to get access to our public Discord, which is the same Discord. You only have access to a few channels, but at least you can interact with us, get a feel for what it's like within the Discord. Some of the channels are open to you, so you can get a feel for how active and how engaged our trading coaches are. So there's plenty of opportunity for you to really up your trading game and master this methodology if that's appealing to you. But as I said, I don't want you to come in and think, oh, okay, well, first thing I've got to do is master Elliott wave. That's not what I'm saying. And so here, we'll look at multiple ways you can approach the market, but they're all tied to those three pieces. It's market geometry, the fib relationships, and then I'll throw in the wild card. Can be Gann angles, can be Elliott wave, can be trend lines, can be. It's not that you came in and said, "Hey, I'm doing really well with Bollinger Bands and trend lines." Well, great. Maybe we can enhance what you're doing by adding some of this methodology to what you're already building some confidence in. It ultimately comes down to that. What makes you feel comfortable and confident enough to be able to pull the trigger? I show you what I do. Because I've done it so many times. So I know the parameters. I know the emotion to expect. I know the risk to expect. I know how I'm going to feel if I'm stopped out or if I hit target. There's no surprises to me anymore. So if you're new to this, everything is going to be emotionally intense. Getting into the market is emotionally intense. But I caution you to getting into the market because you're jonesing for the action. That's never a good recipe. It has to be a well thought out, disciplined, planned business move, decision that you're making. I'm comfortable, I'm willing to accept this risk to achieve this reward. If I'm stopped out, I understood that risk when I went into it, and it was very thoughtful and carefully considered. I know I can afford that risk if I am stopped out. That will not destroy my chances to recover. That's not going to blow up my account. I'm not going to put the kids' tuition money into that trade. All right, guys. All right, I'm running long. Whoa, man, I did not mean to go that long. Okay, so I guess we're a little long-winded here. So we've got all day Friday, or you got the whole weekend to dig through this if you're still watching. All right, guys. All right, with that, I will sign off. Have a good weekend.